So we have a financial issue. We have an internal conflict issue. Okay, in my years of doing this, so something like a little over 50 years, what I found is that many times in my life, things that surprised me were because they never happened in my lifetime before, but they happened many times in history. For example, studying these earlier times, if they happen mechanistically, I need to know how they work. So I studied the Great Depression. That's why we anticipated the 2008 financial crisis, because the same things happen over and over again, but sometimes not in our lifetimes. And so there are three big things that are happening to us that haven't happened in our lifetime. I like to measure things so I can see them in numbers and charts and so on. And those three big things are, first, the amount of debt and money creation, how much debt we have, the rate at which we are creating it, and then where we're getting that money from, the Federal Reserve and other central banks printing it. So that has never happened to this degree except for the 1930 to 45 period, which I studied before, and I needed to go back and study that in history. The second of those two things is the amount of internal conflict, populism of the left and the right, irreconcilable differences, with the largest wealth gaps that have existed, the greatest political gaps, the greatest amount of populism, largest wealth gaps since you have to go back to the 1930 to 45 period. And actually it's larger than that. And you have to go back to 1900 to see that. By the way, if you want to see it, you'll see the charts in that. So we have a financial issue. We have an internal conflict issue that has very big implications for how well our country is run, but also we need to understand that. And the third was international conflict. In my whole lifetime, the United States was clearly a dominant power, and we were in the American world order. 1945, the United States became the leading world power, accounted for half world GDP. We had 80% of the world's money because gold was money then, and we had a military monopoly. And so the reason that we were the world's power, that's why the United Nations is in New York and IMF and World Bank are in Washington, so dominant. But we could see this conflict, this emerging competition. The last time that happened was the 1930 to 45 period, and I need to study that. And so I studied that pattern. And these are the big things in our lives right now, but we're not acquainted with it. So I needed to study the rise and declines of currencies, the rise and declines of empires. And because these cycles go on over a long period of time, I needed to see enough of those cases. So I had to go back, let's say, the 500 years. So I studied all of those. Now, I'm not an academic, I'm a practitioner. So it's not like I'm writing history books. It's for the purpose of making decisions today. What I learned there has been important in our positioning in the markets right now. It's just that practical. But those are the three big things. I also saw in history that there were two other things that were very important. One was acts of nature actually toppled more civilizations, killed more people than the others that I just mentioned. They are droughts, floods, and pandemics. But like a pandemic, that's another one that comes along once in a lifetime and we don't see it. And then, of course, the most important force over a long period of time is man's adaptability and inventiveness. And now we have a greater ability. And that's the plus. You know, the others are challenging. So that's it in a nutshell.
So Ray, you talked about the fact that during our lifetime, the United States has been dominant in the world. It's not as dominant today as it was 20, 30 years ago. Economically or militarily, and compared to other people, where are we right now in the cycle with respect to the United States? Are we at the peak? Are we coming down? How fast are we going down?
When I say these things, I use measures. There are 18 measures of health, and you can see them in the book. And they're measures of things like, what is your percentage of world GDP? What is your percentage of exports? How your reserve currency? But also, what is your education level of education? What is your competitiveness? 18 measures of that. And we are in decline. We're declining on a relative basis, but even also some measures in an absolute basis. So that's what the arc is. And then China has been the leading competitor. I've been having, not since 1984, I've been going to China. Watch it, since I started going there, per capita income has increased by 26 times. And so if you use measures of comparability in military technology, share of world GDP, all of that, you see that. That is the only real power. There are military powers, but history has shown if you're a military power and you're not an economic power, while you may be a threat, you're not going to win the war. So that's what the picture looks like. We could see it, right? We can see it in our various ways.
If you go back 500 years as you did, you have the Dutch, you have the British, you had the US. can a civilization, an empire, as you describe it, change at least the slope of the curve? And I'll give you a specific example right now. Your first thing was creating a lot of debt, creating a lot of money, generating money. The Federal Reserve right now is trying to reverse that process. Could that slow down the decline?
It's all a matter of basics. Do you earn more than you spend? Okay, do you have a good income statement? And do you have a good balance sheet? Do you have one or two parents who care for you and give you the guidance and the values? Can I go to a good public school and have food and health care and come out with an environment of equal opportunity? That's all you need. Because if you do those things, you will have a civil population that will be productive and that you will be financially capable, strong. So you're going to do things better and better and you'll be strong. So it comes down to those fundamentals. When I look at one country or another and I'm thinking, where do I want to invest? It's like I'm looking at those things. Do they have a problem with internal conflict or is it orderly? Just those basics. Now, the question is, can we do those basics? Okay. How are we doing on those basics? You have measures to judge that. Yes, we can do it. And I think the most important thing is how we are with each other. Do we have a democracy in which we can come together and have a very strong bipartisan middle, okay? And then work on dealing with those things. That becomes the big question, I think.
But how are we doing? And again, come back to the Fed for a second.
Oh, the Fed.
It sounds to me like the Fed is trying to take a step in what you would call the right direction right now.
But what happens is, it's really simple. You know, the way the system works is if you give a lot of money and credit and you make it cheap enough, they will spend it. But when you create debt, it's stimulative over the short run and depressing over the long run. Because when you have to pay it back, then you have to earn more than you spend to pay it back. So what do you do with that debt? If you make it tough to pay it back, then what happens is you have an economic downturn. If you make it easy, you print the money. And that's the cycle. So when we look at what the Fed has done, the Fed and the government together gave an enormous amount of debt and credit and created a lurch forward, a giant lurch forward, and created a bubble. And now they're putting on the brakes. Okay, so now we're going to create a giant lurch backward, I think, because it's simple. The amount of, we talk about inflation. Inflation is a very simple thing. It's the amount of money that's spent, money and credit spent, divided by the quantity sold is the price. And so if you take that money away, then you can't get rid of inflation. The way you get rid of inflation is to get people to spend less. And that is what an economic downturn. So the cycle goes like that. And then when you get to the point where, let's say, the economic pain is greater than the inflation pain, then you see them do the opposite. So we're going through that particular cycle. So it's, I think, a delusion to believe that, okay, what they're going to do is deal with inflation and it'll all go away because they'll deal with inflation by doing that without realizing what that means in terms of that, what that means buying power. Think about the supply demand of bonds, just to give you, we have to sell debt. Well, the government is going to borrow, central government's going to borrow about 5% of GDP. So they have to sell bonds in that amount.
Found this video insightful? Hit subscribe, turn the bell on, smash that thumbs up, and dive into the links in the description below. Join our vibrant community to ensure you never miss a video. Your generous support fuels our passion. Thank you for watching. We love you.